Hello everyone, welcome back to my channel. I want to talk about the April 2023 TRREB market report and stats that just came in, so let's get right into it. Hello everyone, this is Sid Sur from Team Real Estate, helping clients with buying, selling, leasing, investing, as well as pre-construction. If this is your first time on this channel, please go ahead and hit that subscribe button for all things real estate. So let's look at the numbers real quick. The April 2023 numbers have just been reported, and the Toronto Regional Real Estate Board is reporting the average sale price in the GTA of $1,153,269. Now that is a 7.8% decrease in price from 2022. Again, as I've talked about in all of my previous videos, this is hardly a surprise due to the fact that last year interest rates were so low, money was practically free, and every single property was selling not only in multiple offers, but people were paying a stupid amount of money over asking in order to secure a home. And of course, over this last year, the Bank of Canada has aggressively raised interest rates, bringing down people's affordability, thereby values dropping over the course of the last 12 months. Now let's look at the number of sales. The number of sales were reported at 7,531 as opposed to last April, which was 7,940. Interestingly, it's only a 5.2% drop in sales year over year. Now here's a more interesting number. New listings were down 38.3% compared to April 2022. Now this is a very interesting fact, and I'll tell you why. Even though sales were only 5.2% lower than last year, new listings were 38.3% lower than last year, which means there's absolutely a huge shortage of listings. I mean, we knew supply was bad, but it's really, really bad now, which is really what drove a lot of buyers to compete for every single property type. And I'll go over my personal experiences of our listings and our buyers in the last month. Before we get into that, let's look at the average prices for each property type. Detached homes reported at $1,489,258, semi-detached at $1,135,000, townhouses at $986,000, and condos at $724,000. Year over year, the decline is for detached homes 8.3%, semis at 9.8%, townhouses at 3.2%, and condos at 8% year over year. Again, not surprising. One other key thing I want to look at, again, coming back to supply, is the months of inventory, which is not reported on these charts, but it's something you can calculate, which again, I talk about in a lot of my videos. It's one of the things I really look for that determines where we are in the market. And what you want to do is you want to take the number of sales and divide it by active listings, and that gives us 0.72, which means we have 0.72 months of inventory, so just under a month, which puts us in a seller's market. Again, very low inventory and a lot of demand equals a seller's market. And when the Bank of Canada decided to pause the rate increases and do a rate hold in the March and April announcements, we really started to see an influx of buyers come in. We actually started seeing an influx of buyers come in after the January announcement when the Bank of Canada increased the interest rate by 25 basis points, which was the lowest increase over the last 8 months at that point. So it gave buyers a lot of confidence to come out into the market and really, for first-time buyers, try to get in the market. Buyers really got used to the higher cost of borrowing and decided, you know what, now is the best time as any to buy because rates aren't going up any further, and year over year we're still saving because we're not paying the prices we're paying at the peak. What's interesting is buyers today are paying more monthly because their mortgage payments are higher. But again, due to a lack of supply, they don't have a lot of choices. Now you might be thinking, well, Sid, a lot of this is probably due to the fact that this is the spring market and the spring market has a lot of action. Now, while that may be true, you also have to factor in the rate hold and the effect and impact that had on the buyer's mindset. Had rates not been paused, had the Bank of Canada continued to raise interest rates, we would not be seeing anywhere near this activity. So yes, the spring market definitely has an impact because this is typically the busiest time in real estate, but the rate holds definitely accelerated everything forward by a lot. I can tell you from personal experience, all of our listings in April all sold in multiple offers, everything from condos to townhouses to detached homes. Another thing to look at would be the number of showings and the number of offers. As you can see in this chart, the number of showings really started to spike up in the end of January, again after that slight 25 basis point increase, and really started accelerating in March and April. And we can see the same thing in the number of offers following that same trajectory, again, signaling that buyers had come off from the sidelines. We're seeing first-time buyers, move-up buyers, downsizers, everybody trying to take advantage of this market right now. Now, a lot of people, including real estate agents, were really expecting 2023 to be a very slow and gloom and doom year due to the fact that interest rates were on the rise and people were really questioning people's ability to pay their mortgages with their, especially those with variable rates that fluctuate with interest rates going up and down. And the reason we didn't see a lot of influx of listings come out into the market is, believe it or not, banks are actually working with borrowers in order to make sure they don't default. I want to show you guys this article by Better Dwelling where more than half of the big 6 banks have a large share of mortgages with 30 or more years to go. Topping the list was BMO with nearly 32.4% of their portfolio having 30 years or more. Then you got CIBC at 30% of its portfolio, TD at 29.3%, and RBC at 27%. Now, these are not mortgages with 30-year terms. They're mortgages with at least 30 years of repayment left, which means banks are increasing amortizations periods in order to make sure people continue to make their payments and keep their payments lower. Now, most variable rates tend to have pretty similar monthly payments even if rates go up. Borrowers are just paying more towards interest than principal, and vice versa. When rates go down, they're paying more towards the principal than interest. But it's very interesting to see these numbers because this again signals that a lot of sellers weren't panic selling because banks are willing to work with them to make sure they keep their property and continue to make payments. Now, you might be wondering, where's the market going to head the rest of this year? Is this craziness going to continue? Well, I personally think that the summer months are going to bring out a slight lull and slowdown, typically because summer months tend to be slow. But given the way things are going, and again, the shortage of inventory, I do think sales numbers are going to be pretty steady, although I don't think they're going to be as aggressive as the April numbers. However, I do see prices trending or continuing to trend upwards, again, due to the fact that there's a lot more demand and just not enough choices in the market. But I'm curious to hear your thoughts. Let me know in the comments if you think the market is going to continue to trend upwards with both prices and sales, or whether you think the rest of this year is really going to bring a doom and gloom situation. If you guys found any insight in this video, please go ahead and like, share, and subscribe. I'll see you guys in the next video.